Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, amid the steep market sell-off, what are the buy signals for investors? Well, Michael Gable from Fairmont Equities says he's studying the technicals to identify key levels of support on the ASX 200.
That big blue line, which was the breakout from early last year, we've now fallen under that blue line. Look, I think we're approaching sort of levels where, looking at previous turning points in the past, could offer some support, but at the moment the market's moving pretty swiftly, so just have to, as I said, just wait for that sort of washout to occur, and then when you see the reversal, you're ready to buy. And to be honest, I'm obviously, well, maybe not obviously, but I'm in the camp that you'd be looking for buying opportunities. I mean, the time to sell was obviously a few weeks ago or so. After these sorts of moves down, if you think back to COVID and you think, wow, that was a fantastic opportunity to buy. I wish I, did more at those lows. Well, I mean, we've almost got a similar sort of move, but this is all, pretty much created because of Donald Trump. We don't have a pandemic out there. So just as quickly as this has all started, it can just as quickly turn around.
Well, Michael Gable says US equities tend to be more predictable than the Australian stock moves. He takes a look at the weekly chart of the S&P 500 going back to just before the global financial crisis.
And the blue line is the 200-week moving average, and it tends to like that moving average. It tends to bounce off that. So as we could see at the far left-hand side with the GFC, yes, it did fall under that blue line, but it did spend a few weeks bouncing off it, and that's what I'm expecting at this point, some sort of bounce off that 200-week moving average, and then you could reassess it at better levels if you're still comfortable with the stocks that you're holding. And apart from COVID, where very briefly it dipped under and bounced back up, any pullbacks have tended to respect that 200-week moving average. So look, that's about 400 points away. The US futures are down about sort of 3 or 4% as we speak. So potentially you've got another down day or two in the US before you see some sort of relief rally. So as I said, if the US is already down, let's say 20%, and you've got another 5 coming, we're closer to the next bounce. I wouldn't be selling anything here. I'd be looking for.
That was Michael's view as of Monday this week. Well, in the market's eyes, the notion of US exceptionalism has pretty much evaporated. Richard Weissman from Weissman Consulting looks at how this is playing out for the US dollar.
The euro is in a well-defined uptrend. You can see from around December through February, even late part of February, we were making this bottoming area, and then we really took off with the first hints of this tariff issue. And we have made even more progress. It seemed like things were going to stabilize, and the news related to that was, the tariffs won't be that bad. They'll be 10%, no big deal. Let's stabilize this resistance area. That, 109, 50 area that is going to hold. And we broke that, and because we broke it, our next target is probably around the 112 area. And it looks like this is a strong bull market as opposed to moderate.
Well, that's it for this week's edition of the Charts to Watch. Join us for more technical talk next week. Happy trading.